Hey there. In this video, I'm going to explain how do you post the journal entries that we did in the last video into the ledger. So it's best if you download the document for this video and either print it out and write along with me or put it into your computer or type it in as we go along. So I want you to participate with me in this video as we go. Okay, so here I have what the ledger looks like. The ledger includes the T account. In the journal, we have each transaction and we have a journal entry. And the order for the journal, it shows you what happened on each day and it shows you what debits and credits you've recorded for that. The problem is when you look at the journal is you can't see, you can't see what is my cash balance. And so that's why we need the ledger. The ledger will accumulate what happens in each account. So all the increases in cash will go here, all the decreases in cash will go here, and then we'll be able to see the ending balance. So the ledger and the journal have the same information, but it's shown differently to provide different information. When I do the ledger, I put all my assets together. And so here are the assets I need for this question. And on the debit side, this will include all the increases in those assets. And then on the credit side, this will include all the decreases. Here are my liabilities, and all liabilities increase on the credit side and will decrease on the debit side. Equity is mixed up. So we have contributed capital and we have revenue, and these will both increase on the credit side. Expenses and dividends are parts of equity. Remember that the profit and the dividends are included in the retained earnings calculation. So the revenues, expenses and dividends is ultimately part of retained earnings. So they will follow the rules for retained earnings. Now, when your expenses increase, this will decrease your profit. And so to decrease your profit, this will lead to a decrease in retained earnings. To decrease retained earnings or equity, it's a debit. So expenses and the same for dividends. Whenever they increase, we always record this as a debit because this will decrease the total equity. Okay, so I'm now going to demonstrate how to copy the information from the journal into the ledger, and I want you to do this with me. So having a look at number 1, we have cash debit and contributed capital credit, and for some reason these numbers here have moved a little bit. I don't know why, but that's not too much of a big deal. I'll quickly change that. Okay, so we have cash debit, contributed capital credit, the same number, 15,000. So I go over to my T accounts, and for cash I put in the debit side 15, then I go to contributed capital, and then on the credit side, I put in 15,000 as well. Once you've done that, then you go down to the second one. And I have equipment and supplies. Both are debit. And I type the number onto the debit side. The credit for this is cash, 10,000. And so I go to cash, onto the credit side, and I put in 10,000. Number 3, I have cash debit, and I put that into cash on the debit side, and then I have revenue credit, and I put that into the credit side. Number 4, cash debit, 2,000, and the credit is for unearned service revenue, so I find that T account. Now, if you were doing this question yourself, you would have to draw each T and write the name at the top as well. I've already had that prepared just to save us a little bit of time. And number 5, I have advertising expense is a debit, and I have cash is a credit. Now, could you stop the video and copy all of those journals into your T accounts and then start it again and we'll complete it together. Okay, so now I'm up to number 6. I have accounts receivable and I have service revenue. Then I have equipment, another debit for equipment, and the credit goes to notes payable. I have another cash, 3,500, which the credit is accounts receivable. And then we go to the expenses, salary expense, and we paid cash to our employees and we paid a dividend. So the dividend will increase. Every time you pay a dividend, you have more dividends and you're paying cash. Okay, so now I have completed my ledger. So I have copied everything from the journal into the ledger. The next step now is to find your ending balances. So for cash, to find the ending balances, I'm going to add up the debit side. And that is going to be 22,000. And then I'm going to minus the credit side, which is 13,750. And this will give me 8,250, and that is my ending balance. So what does this show us here? On the debit side, I have all of the increases in cash. This is all of the cash received by my business during this month. On the credit side is all the decreases. This is all the cash paid by my business this month. So I can now find out how much cash I have left. How much did I receive minus how much did I pay? This is my ending balance. Having a look at accounts receivable, I have the debit side and I minus the credit side. So this will give me a 0 ending balance. Why is that? Accounts receivable increases because we provided the service to the customer, but we were waiting for the money. But then during that same month, it then said we collected that money from the customer. So when you collect the cash from that customer, the accounts receivable will decrease and cancel. Now the balance for supplies, this shows us that we have $1,000 in supplies in our business, and we add up all of our equipment, and this shows us we have $18,000 of equipment in our business. All assets have ending balance on the debit side. This is the increase side. This is called the normal balance. All liabilities will have the balance on the credit side. Liabilities increase on the credit side, so ending balance is going to be on the credit side. This will show us that we owe $2,000 in services to our customer, and it shows that we owe $9,000 to our customer. Okay, so I've filled in the balances for equity now as well. The capital and the revenue have the balance on the credit side, and your expenses and dividends will have the balance on the debit side. Now, to check, you want to see, do the total debit balances equal the total credit balances? So let's highlight all our debits in blue, and this is what I'm going to add up. And also included here, expenses and dividends have debit balances. So I'll just use an Excel formula and I'll add all these up. Excel's fabulous to use for your calculation questions. Okay, so that is my total for the debits. Now, my credit balances are going to include the liabilities, the equity accounts, and the revenue. So let's add those up together, and I'm hoping it will be the same as my total debits. Hooray! So remember that your total debits should always be equal to your total debits. Oh, your total debits should always be equal to your total credits. All right, try the practice exercise and give it a go yourself.